Welcome to Crypt Courses and our first free module on technical analysis. Today, what I'm going to be talking about is the market structure when we're in an uptrend, when we're in a downtrend, and when we are in sideways market consolidation. And I want to stress the importance of understanding this from the higher term time frames like the daily and the weekly. So in today's video, I'm going to discuss how to identify an uptrend, how to identify the downtrend, and why it is important to understand the higher term time frame trend. And again, what is a sideways market consolidation? We're also going to discuss why you want to essentially be buying the higher low, and why you want to be selling the lower high, selling the lower high in a downtrend. In a sideways market consolidation, you want to buy support, sell resistance, buy support, sell resistance. And if you don't understand market structure and how it works, it's going to be very, very hard for you to become a profitable trader. This is the first thing you need to understand. So continue watching this video. I will show you exactly how market structure works on the higher term timeframes. And what I've really noticed in some of my live streams is that people generally just have no idea how to identify an uptrend, downtrend, or where we are at in the market structure. And bottom line is, if you don't understand market structure, it's going to be very difficult for you to be able to pull profits out of this market. And it doesn't matter whether you're looking at the NASDAQ, gold, silver, bonds, anything on a chart, the same kind of general rules apply. And so how do you make a higher high and a higher low? How do you get a trend reversal on the daily time frame or the weekly? And mainly you got to see two of each. So you want to see the higher high and the higher low, higher high, higher low. That's a confirmed trend reversal. And again, you want to see all four pieces of the puzzle. So higher high, higher low, higher high, higher low. That's the trend reversal. Some people do like to front run the decision and they will buy based off the first higher high and higher low. They will just start buying right there, bidding in. I personally like to see a confirmed trend reversal before I really start to put any weight behind my trades. And the same thing applies on a downtrend reversal. You want to see the lower low and the lower high, and then a lower low, lower high. And on the daily, this can be identified. So let's start out with the daily. We'll take a look at the weekly, and then we'll see where we're at in the market in general right now. I'm going to get rid of my Dixie chart, go back to my Bitcoin on the daily, and I am going to take off some of these lovely little indicators. And where have we been in this downtrend over the last well, since March of 2021, so we're talking about a year and a half now, 12 to 18 months of sideways and down, and that's generally what happens when you get a weekly reversal. So clearly, this was the first lower low, and here's your first lower high on the weekly time frame. That was your confirmed trend reversal. Like I said, you have the 4 points of confluence, this low to this low, or that high to that high. So trend reversal and big down. And when you do get a trend reversal on the weekly time frame, that is when you expect typically you expect 12 to 18 months of sideways and up or down in that direction. If it's a downtrend, obviously down. If it's an uptrend, then you'd be looking up. But I do want to bring this on to the daily. Maybe I'll look at another chart here. I guess I could use this one. But the daily time frame, just going back here, we had this massive uptrend, right? And you can see by this trend line essentially. And what happened was we were getting higher highs and higher lows, right? So you got higher high, higher low, higher high, higher low, higher high, higher low, higher high. Oh, lower low, lower high. Trend reversal on the daily. Don't fight the daily downtrend. Don't fight it. Don't fight it. Then we go into a bit of sideways market consolidation. Everybody was looking at this as a descending triangle at the time, I remember. And very similarly to what we had just seen, we had a bit of a fake out here and then punched back into the triangle and boom, off to the races. And here's your higher high, higher low. Pretty simple way to get some bids in on that one. That was your first warning sign. But essentially, if you were trading this as a sideways market consolidation, right, you would have been buying here, selling here, buying here, putting your stop loss below the prior wicks, right? So that's another thing that we will cover, risk management. Essentially, as soon as we broke this trend line back to the upside and put in that nice little higher low, that was the area you wanted to start getting bullish again. Same kind of structure here, higher high, higher low, higher high. Oh, what happened? We got our first confirmed lower low and lower high right here. A little bit hard to see there, but in my book, that would be a confirmed lower low, lower high, and got you a nice little trend reversal to the tune of 29%. Not bad. So where are we at in the midst of Bitcoin price action? Could we call this a major sideways consolidation for the last few months? Currently in a daily downtrend, right? We're making the lower highs and lower lows, and we're about to confirm another lower high, which begets us our continuation signal down to about 25,300. Pretty nice confluence there. Weekly uptrend is still in play, and this could be just a bit of a backfill. As soon as we take out that wick, though, it's done. So you can see on the weekly, here was our first higher low, higher high, higher low. So you got the 4 points of confluence. Weekly reversal, we should get 12 to 18 months of sideways and up. This takes a bit of a nuanced interpretation, and I would consider this as kind of a complex high playing out. And where do we expect those higher lows to come in? Well, somewhere between the 0.5 and the 618. I do imagine Bitcoin does come somewhere between 21.5 and 23,000 over the next 3 to 6 weeks, something in that range. But that does not change the overall weekly uptrend, which if you can expect sideways and up on Bitcoin for the next 12 to 18 months, well, that's probably going to have some effects on your altcoins. Again, this is why it's important to understand the higher term timeframes, because it will give you a bias on whether the price is going to continue in the longer term time frame to the upside, or if price is going to continue to the downside. So being able to identify the weekly trend is very, very powerful. In a downtrend, that's when you want to be going short. In a uptrend, that's when you want to be going long, because the trend continuation signals are going to get the bigger moves. You're going to trade with more confidence and confluence. Again, letting the trend be your friend until the end of the trend. Now, on the lower term timeframes, there can be so many things happening depending upon what time frame you're trading. So it's important to keep the overall higher term time frame of the market structure in mind. Things never go in a straight up or a straight down. What happens is you go up, then you trade sideways, and depending upon how the sideways market structure breaks, you're either going to have to resume the uptrend or start a downtrend, or vice versa. And if you don't understand that you're in a sideways market, well, then your take profits and stop losses will be very wrong, and it'll be very easy to get faked out. So sideways market consolidation, that's what I wanted to go over with you. So essentially, when Bitcoin is consolidating up and down, it's in a range. You're either going to break the range to the upside or to the downside. If you do break the range to the upside, you're looking to buy the higher low using the previous resistance as support, and vice versa. If you break it to the downside by closing below with a candle body, you want to sell the lower high using the support now as resistance and get the continuation drive. So pretty easy to understand how the market does have a structure within an uptrend or a downtrend or in sideways market consolidation. From sideways market consolidation, you're either going to break to the upside or the downside, creating a new trend. This is just a short video because I do recognize that a lot of people just have a hard time doing some basic TA and being able to understand where we're at in the market structure. I hope you guys enjoyed the video. Tune in for the next free module as we want to get you guys started with the basic market understanding. If you only understand what is an uptrend, what is a downtrend, what is a sideways market, this I can believe will make you a much more profitable trader without putting in a whole lot of work. And again, if you do like the video, please give it a thumbs up, post a comment below. And in the next video, I will break down some of the lower term time frame trends and how you can have essentially opposite trends within the lower time frame. But the first thing you need to understand is the overall picture in the higher term time frames where we are at in the market structure. That being said, I hope you guys have a blessed and highly favored day, and I will see you in the next one. Take care.